Evelyn, we're talking some Starbucks. It's fall, and that means it's pumpkin spice latte season at Starbucks. Is that what you're seeing when you're checking social media?
Yeah, I did see a lot of tweets about all the new flavors that have been rolled out at Starbucks, in addition to the pumpkin spice latte and all of the pumpkin spice flavors that Starbucks had already rolled out. I believe it was in August, if not early September, but it seemed a little too early for fall, but people were excited. And I don't want to disappoint you guys today, but I don't have any pumpkin spice latte specific tweets. Instead, I saw a lot of activity on social media regarding the stock's dividend increase this week. So Starbucks stock did get a little bit of a boost earlier in the week when the company announced that it's going to increase its dividend by 10% up to 45 cents per share. That also increases its annual dividend rate up to $1.80 per share. But like this tweet on the screen, I saw a lot of positive reactions. People said that they love Starbucks and that because of this dividend raise, they feel like it's easier to spend $4 for a Starbucks coffee. And so I feel like it really, Starbucks is increasing its dividend, really made its investors feel supported by the company in a way. At least that's how it looked on social media. People were excited about going out and buying more Starbucks products because they felt like the company was taking care of them as individual investors, even with just a 10% dividend increase. And that, I think, really speaks to Starbucks' brand as a whole. And also all of the different initiatives that Starbucks has been implementing throughout the pandemic to try to stay on top of things. In fact, Starbucks said that the decision to increase their dividend was to demonstrate the confidence in their own recovery and the robustness of their long-term growth model. Starbucks is implementing a bunch of new changes as far as increasing more curbside pickup, curbside service options at its locations. It's also been trying to shift its locations out of city centers and erect more in the suburbs and more rural spaces. But I also have this next tweet that I want to introduce for you guys. And this Twitter user said that in the long run, in food, you want to own value-added plays, not commodities. What alternatives are there? Hormel owns the US's top branded guacamole. Like Starbucks with coffee, the brand makes the money, not the farmer. And I feel like Starbucks has done an incredible job at really doing what this Twitter user said. I mean, it's not the fact that their products have caffeine and then that's making all of their consumers addicted to their product. Well, not in so much, right? But it's the fact that Starbucks coffee is Starbucks coffee, that people like having that branded cup in their hands, whether it's a pumpkin spice latte or just a black coffee. And while there are some obvious naysayers against, large companies, large corporations across the bar, it seems like brand loyalty in Starbucks is at an all-time high. But Kevin, I wanted to ask you. Yesterday on the show, you were talking about Lululemon, and you mentioned the cult following surrounding Lululemon. And I wanted to ask, would you say that Starbucks also has that perceived cult following around its products, around its brand name, and has that really helped the company this year throughout the pandemic?
I think several things about your comments are important. And the first one is, think about what retail stores, Evelyn, have been through. And for Starbucks to come out now and raise their dividend, number one, that puts confidence in their brand with investors and people involved with Starbucks, right? Because you're like, they're not raising their dividend if they don't feel good about the present and the future. So I think that's really important. And do they have brand loyalty? Only things like the McRib and the Shamrock Shake have more as much loyalty. You have to go to that level to go up there and get the loyalty that the frenzy that's around the seasonal drinks. And I can't even list them all. So, but they have these seasonal drinks that everyone just loves. And at the end of the day, comfort is comfort, and people are going to go get what makes them feel good. And Starbucks has that brand nailed down. And only McDonald's can have the overall scale that a Starbucks does. So you're talking about scale. You can't you can't swing a hockey stick in a suburb or the city without hitting a Starbucks at some point. So they're everywhere. So yeah, they've got scale, they've got product, they've got loyalty, and they just raise their dividend. A lot of positives here at Starbucks. That's why in a day where the market's down, they're down only 0.2%, guys.
Yeah, and Kevin, I think to Evelyn's point too, it might even be the same consumer that follows Lululemon and follows Starbucks. It might be the exact same consumer, but I think the one thing that's certain for both those companies, particularly Starbucks, Evelyn, that you kind of alluded to, is they're extremely data driven. They're looking at trends in terms of moving out of urban centers into suburbs. They're focusing on the suburbs. They're always a step ahead, it appears, and they're always focused on what's next. They've had the mobile ordering. They've had the mobile pickup already in place before this. They were able just to take it in stride. There's been hard times, but they've been able to adapt. And to both your guys' points, one of the most powerful brands that currently exists. So we'll see what it means for Starbucks going forward. The dividend story is certainly interesting. And I'm sure as we say goodbye here, Evelyn, thanks for joining us as always. Evelyn Baker, TD Ameritrade Network contributor. We're going to welcome in Landon Swan, the co-founder of LikeFolio.com. And what I was about to say there is I'm sure that these seasonal drinks, particularly the pumpkin spice drinks for Starbucks, leads to a bit of an uptick in at least talking about Starbucks. Hopefully for Starbucks investors, an uptick in consumer purchase intent mentions as well, Landon.
Yeah, you would think so. And there is a little bit of that, but it's really not as much as you may think. It's people really like to share on social media that they're going to Starbucks for whatever reason. And of course, they get hyped up about the seasonal frappuccinos, lattes, and what have you. But it's really not, it doesn't really water down the data too much. And when we look at the purchase intent for Starbucks, people talking about getting Starbucks, drinking it, going to it, it's actually in a pretty sharp decline. You can see it peaked in late fall of last year, and it's that it's seasonal, of course. That's part of that the seasonality you're talking about. But you would have expected it to come back given a normal year. Obviously, this is far from normal year. But what's interesting is if you look at analysts, the revenue for the last few quarters has been 7 billion, 6 billion, 4.2, and now the one that just ended 2 days ago, analysts are expecting it to bounce back up to 6. And we really just don't see that. We see a pretty flat quarter. The quarter that, like I said, it just ended on Wednesday. Purchase intent is still continuing to decline. It's sort of flattening off, but it's definitely at very low levels compared to what we've seen. And it makes sense. If you got people that aren't going to work, they're working from home. You're less likely to go to Starbucks, pick it up, and come back home and go to work. So if you're losing all of that transportation traffic, it's definitely going to transportation. People coming into the stores on their way to work. You're definitely going to lose a lot of sales there. We've got purchase intent down about 30% year over year. So I think they report in maybe 3 or 4 weeks, something like that. It's not confirmed yet, but the quarter just ended, and we do not see a V-shaped recovery in revenue that many analysts are expecting.
Yeah, Landon, this is one of those days when LikeFolio's content really stands out. And that is when you identify a divergence between the stock price and the data that you're receiving. So when I look at something like this is giving me a pretty big warning sign from your data. And the stock obviously has recovered. Obviously, they also just raised their dividend. So they must be feeling at least more comfortable on what they're doing. But your data tells a completely different story here, Landon.
Yeah, I agree. And again, this is, we're looking at what we expect revenue to do. Obviously, stock price is very important. They're not quite back to where they were in February, but they're very close. 86, I believe, is where they're at now, 86.50. So they're very close to where they were pre-COVID. And really, it comes down to those analyst expectations. From what I can see, it really does look like analysts are expecting a sort of a bounce back quarter where, again, it went from 7 to 6 to 4, back up to 6 is what they're expecting. I think those expectations are a little bit lofty based on our purchase intent data. And so, we'll have to see. Obviously, that we'll wait 3 or 4 weeks until the earnings come out, but the quarter did just end. The results are all in as far as we're concerned. Obviously, they're not going to get released to Main Street for a few weeks, but this is a divergence opportunity for sure.